I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Crude oil prices continue to surge this week amid no end in sight for the war between the United States and Iran. Global benchmark crude prices traded back towards $120 a barrel on Wednesday and rose to their highest level since the war began. Countries that have previously relied on trade through the Persian Gulf had flocked to the U.S. for relatively cheaper oil supplies. Last week, the United States exported a record 6 million barrels a day, according to recent data from the Energy Information Administration. That surpassed the previous record of 5.3 million set in late 2023. Combined oil and fuel rose to a fresh all-time high that has ultimately put pressure on U.S. oil and fuel stockpiles. The ongoing energy supply crunch is expected to remain a tailwind for the broader commodity market. Finalized biofuel policies led to more positive sentiment among large oilseed processors. Bunge released its Q1 earnings results for 2026 this past week. The company raised its full-year profit outlook as stronger biofuel blending requirements are expected to boost oilseed crush margins. Bunge adjusted its earnings to be about 20% higher than its initial 2026 forecast. CEO Greg Heckman said a bright spot in agriculture is biofuels. Clarity regarding U.S. biofuel production requirements is expected to bring downstream benefits for oilseed crushers. That demand is expected to ripple back through the value chain. Management noted that stronger biofuel margins are driving high value back to the farm gate, reinforcing incentives for oilseed production and processing. As a result, Bunge sees a supportive environment for crush demand, with soy and softseed processing results already outperforming expectations in early 2026. Already, crush margins have been pushing to historical highs amid higher soybean oil and soybean meal prices. Energy constraints with the conflict in the Middle East are expected to be a tailwind for biofuel demand. U.S. pork exports have been running at a stronger pace this year. After falling from their record in 2025, shipments this year are poised to rebound to a new record. As of April 16th, total exports and commitments reached 792,000 metric tons, up 18% from the previous year and the fastest pace since 2021. The increase has been driven by higher demand from Mexico, Japan, South Korea, and parts of Central America. Exports have been a major driver of U.S. pork demand over the past decade. Exports are forecast to represent about 25% of total demand this year. With shipments expected to account for a quarter of demand, exports should remain a critical pillar supporting the hog market. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.